Okay, Jagannadham, good morning. Thank you for joining us. What do you expect from Reliance today? Are we in for surprise or some disappointment?
Reliance results, first of all, holds key for the overall market sentiment because this time there is a lot of anticipation in terms of earnings pickup and earnings growth. So in that context, the big boys like Reliance delivering is quite crucial for the Nifty to sustain around these 10,800, 10,900 levels. In terms of Reliance performance, already market is getting in with a lot of anticipation and positive expectations. So on the besides the oil and gas, market is also keenly watching how the telecom and the retail will start playing, of course, because these new emerging areas, a lot of capex went in. So in that context, it's quite crucial how the company will deliver. And also probably if there is any news in terms of the Reliance Jio, if there is any eventual separate listing or anything of that sort, can be interesting development. Market will be keep watching. So on the oil and gas front, I think market is betting that it will be a positive GRM number this time. So that's the reason there is a pre-earnings rally that we had witnessed. Almost 6-7% kind of rally in the last 2-3 days. So I hope if Reliance delivers positive results, we can hope that probably the current levels can be a reasonable bottom to start with.
Okay, Jagannadham, we also have HUL earnings today. What do you expect from the consumer major?
The HUL results can be positive because one is the major news that recently the takeover of GSK Consumer Healthcare and that related developments. Of course, that will eventually pan out in the next 2 to 3 years. But consumption as a theme, market is betting big, and HUL definitely holds the leadership position there. So in that context, even the HUL results are of great significance in the overall current market conditions now. And I think if there is any commentary in terms of the eventual integration with the GSK, markets will be keenly watching, and also valuations are no less, make no mistake. So meaning thereby there is no scope of miss. I think there is no scope of the earnings being miss. It can have a immediate significant impact on the share price. So it's a precarious kind of situation where, in terms of the valuation where HUL is standing. Let's hope even they will deliver good, and especially on the rural demand, the things are still not appearing to be that robust as we had anticipated. So if there is any signs of green shoots there, maybe because of government push on pre-elections, etc., HUL can sail through better. But as we speak, I think the HUL can't afford earnings miss at this juncture in terms of valuation at which it is standing.
Just want to talk about where Jet Airways may be headed, because this is really turning out to be one of those limbo cases. You don't know which way Jet is going to move, and especially after Nivan Goyal of Jet Airways now says that he's going to turn around the company in about 18 months, as the lenders consortium still is awaiting the counter offer from the promoters. Jagannadham, would you say that it's best to stay away from Jet, both from an investment perspective or for trading as well in the stock, because there's such heavy news flow and such sensitive to the stock price, you don't know which way it's going to move on a daily basis?
Absolutely. I think aviation is definitely not the very comfortable place to be, not just the Jet Airways, because so much of data flow and so many headwinds. I think it simply doesn't add up, because especially after the deep corrections market had seen in the last 3-4 months, so many opportunities are available. So why should one be so aggressive on aviation? It doesn't make much sense. So I think especially Jet Airways, with all the challenges, very, very difficult. Turning around any company is difficult, but turning around aviation company is a virtually very, very daunting task. So in that context, I think better to stay away. I think at this moment it is so volatile. Even for seasoned traders, it's very, very easy to get trapped. So I think there is a lot of money can be made on other stock ideas.
Okay.
Once again, the price of crude, $60 again. $60 again. It's not like at a scary level per se, but $60 for crude is always something. 61 actually now. $61 for crude. You always got to be slightly mindful of what is happening in crude. Jagannadham, crude may have moved up from 57.58 to 61, but it is way below 85. How come there is no excitement in OMCs?
Yeah, I mean, in terms of OMCs, of course, after that surprise action from the government in terms of passing on some burden to OMCs, there was a complete change in the complexion of the way OMCs was seen. Of course, it was just a 1 rupee cut, need not be such a major thing. But markets definitely went on a bit of double thinking mode in terms of how to position it. But having said that, when the crude oil went to $55, $56, I think there was some relief rally kind of thing on OMCs. But especially in election year, when the government slightly getting into populistic kind of tone from the reformist tone, I think OMCs still appearing to be slightly not so convincing trade. So there can always be a challenge of some surprise announcements from government, especially in the pre-election season. So I think probably one will be better off probably staying away. And also crude oil is also attempting to make a comeback, because we have to understand it's from $86 to $56. So that's a $30 correction. Even if there is a $10 of retracement, there can be again talks about 66, 67 kind of dollars kind of levels. Again, there will be too many ifs and buts. I think at this juncture, OMCs in a pre-election mode probably is not the safest of the places to be.
Okay, Jagannadham, you know, what's the sense that you have with regards to pharma currently? Because a lot of brokerage reports are looking at bargain hunting within pharma. What would you recommend?
So a lot of smart money is sort of staying away from pharma, because nothing specifically happening, because even though there was anticipation that pharma probably cycle has bottomed out and there may be a chance of uptick in overall pharma and there will be new additions, but I think that definitely didn't happen. I think smart money is staying away. And also what happened is after deep corrections of October, November in Indian markets, there are so many opportunities available now, which were otherwise highly expensive in the beginning of the year, I think at 2018. I think now market is definitely going into those stock specific opportunities. Pharma is probably at best maybe a stable kind of performer and not necessarily can be a huge multi-bagger per se. One has to be very, very careful. For example, let's say stocks like say Natco Pharma, where some buyback is going on at say 1,000 rupee price, even at 680, 700, the stock is trying to find it difficult to make a break. So that shows that the current sentiment on pharma is not in the best of the health. So investors have to position accordingly.
Jagannadham, where is it that you're finding value within the entire banking space? Or would you continue to stick by with Axis and ICICI Bank?
Yeah, at this moment, in terms of the banking, of course, those appearing to be the more popular trades, ICICI Bank and Axis Bank. And the only caution is the corporate banking investing into these names appearing to be slightly overcrowded theme. Almost everybody on the street is almost talking in the same language. Sometimes these things can throw surprises. I think investors have to be a little cautious putting in aggressive money. And moreover, considering banking has 35% weightage in Nifty, if the overall Nifty, if there is a bearish downtick, banking has to lead the downway as well. So I think one has to be a little careful on the overall positioning, because if somebody would have bought at the lower levels, probably they can enjoy the ride and ride the upside. But I think at this moment, this is appearing to be a slightly overcrowded theme.